Good morning. This is George Kachuk with Know Your Options Inc. reporting to you from the CME Group trading floor in Chicago. I hope everybody's enjoying their holidays. Some of the things I'd like to talk about this morning is the state of the current market and some of the positives that we're seeing in this market going forward. Okay, first off, the market continues to be in this cautious uptrend, and we're still calling it a cautious uptrend because there still is the headline risk. If we look back what happened last week, we had some very solid accumulation on high volume going on in the NASDAQ and the S&P 500. Markets climbed very strongly in big volume. However, Friday, they got hit pretty hard on really hard, strong volume, but of course that was due to quadruple witching expiration, which causes volume swells in the market. But the market sold off pretty hard. However, NASDAQ was able to close near its highs of the day, and we did see a lot of leading stocks continue to perform very well. So that's why the market's still in an uptrend, has not been derailed, but we're dealing with this headline risk. Now for the NASDAQ, it's still staying above the 3,000 level, which is very positive. We'd like to see it take out that 3050 level, so that would give us some more confirmation that we're ready to go, and that's what the market needs to do. The S&P 500 still above its 50-day and 200-day. As long as it stays above the 1513 level, that's a 50-day moving average. Needs to take out the 1445 level, give us some more confirmation to the upside. And of course, if it slips below the 1400 level, it may make us rethink this whole strategy of an uptrend. Hey, now, what are some of the positives we're seeing? Well, we know what all the negatives are. We keep getting hit with it every day in the headline news about the fiscal cliff, etc. However, let's take a look at some of the positives in this market. We still have a very loose monetary policy going forward. That's always very good for the market. We have a housing recovery. Many people didn't believe it. However, that's pretty much solidified right now going forward. We have record corporate profits, and yet valuations are very low. We also have record cash on balance sheets of these corporations, so that's very good. Now, looking at the sectors that are performing well, we have consumer discretionary sector near its highs. We have the financial sectors nearing its highs too, if you look at the ETF like the XLF. We have the industrials doing very well. So these sectors are economically sensitive, and when these start to perform, it means you better maybe reconsider all the negative news in the market and take a look at the positive side. Now, looking at the market internals, the NYSE advanced decline line is near its highs. We have more new highs outpacing new lows. Again, it's a very positive thing for the market. Now, one of the other things that doesn't get mentioned too much is if you look at the S&P 600 small cap index, that's just like about 2% off its all-time highs. If you look at the Russell 2000 index, another small cap index, that's pretty much near its highs too, just a few percentage points off. And what that tells you is that Wall Street's willing to take on a little bit more risk. So again, you need to pay a little more attention on the long side. Now, if we look at the global markets, we talked about this last week. We do have the German indexes near its highs. We do have the French index near its highs. We have the London FTSE trying to take out its highs. Asian stocks are doing very well near their highs. We look at Hong Kong and China. So again, that's telling us that it's worth taking the risk going alongside on this market. Now, some of the stocks we're looking at, of course, the ones we mentioned in previous segments, still related to home building, all those are still doing very well. The machine groups are still doing very well. I have two picks for you today that you might want to consider. Ashland Chemical makes chemicals for the automotive, construction, food and drug industry. Just broke out past the 78 area, had a base that showed some good accumulation. It's still viable up to about the $82 area. It's trading right about $79, $80 right now. So if you want to take on some risk, you could consider that. Another stock in the small cap group is On Assignment. The symbol is ASGN. Basically, it's been forming a flat base since September. If it can take out the $21 area on high volume, that may be something you might want to consider. The idea being here is that commercial staffing, this whole sector is doing very well, and this company is taking advantage of the fact that companies are a little bit scared to hire full-time workers. So a company like this provides well-trained part-time workers for various companies. So, of course, don't always take my word for it. Let price and volume be your guide. Anything can happen in this market. We're still exposed to headline risk, but there are a lot of positives going on. So let price and volume be your guide. Continue to have a happy holiday. This is George Kachuk with Know Your Options Inc. reporting you from the CME Group trading floor in Chicago.